All right. Good evening, good night, good afternoon. Let's do a end of day review for today, which is August 16. Can you believe that? We are in the middle of August now, 2023, and it's a Wednesday. And the day that the FOMC meeting really, right, at 12 p.m. Eastern time, and it's really went down. So let's see. It's the 1 minute time frame, but if you look on the 5 minute time frame, you see how it went down right there. Let's review two practice trades that we are taking, or at least we backtest them. Wait a second, let me look at the Alright, so I think we have two trades that we take and we put into our journal. The very first trade is a long setup. It's beautiful and it have a last confluence. You have smart money diversion, and then you have the buy sell liquidity will hit, right? You have a good risk reward ratio. Yeah, okay, let's take a look what does it look like. Okay, let's look at the, hold on, what's going on? Okay, let's look at the screenshot that we are checking. Screenshot that we are checking right there. Hold on, why it not show up in here? Come on, my friend. Very strange. Why it not pop up? Let me do this for now. Alright, so right here the screenshot we check, right, it's about 9:36, right? We decide to go in here, right? That's the practice trade we check. The first thing that come into our mind when we check the trade is we are saw the sell side liquidity was taken, and we see this is a retest, right? That's the beauty, but at that moment we don't see it right here. This is a so-called sell side liquidity trap. Later on we see that right here also. Yeah, we put right there, buy side liquidity, and you see it make the high right here. That means it trap this buy side liquidity, which is a pullback, and then we go take all the buy side up there. So that's the idea there. And the targets, the entry right there, 36, right? And the target is one more thing. When we look another confluence for it to go along, it's also right here. No. Why? Let me copy this. Okay, so right here we see Right here we see the confluence, right? At 9:30 it open, the QQQ make a low, while the SPY make a high low. So that give us a reason to go long right there. So that's the second, factor, right? The first factor, we see the liquidity that give us a bullish signal to go long, and then also we see the smart money diversion, which is allow us to go long. Right, let me see. Allow it to go long right there. Let me put this in for now. All right, so you see that the diversion, right? So I give a reason to go long right here. So we have a reason is the liquidity imbalance, and it imbalance in the buy side. So that means you're gonna go 6 buy side liquidity because the buy side is trapped. You only take sell side liquidity, so that imbalance in buy side liquidity. That's why it got to go up. That's the liquidity, factor is at bullish first. And the second factor first is we use so-called smart money diversion, smart money technique diversion at 8:30, at 9:30. We see that there's a diversion right there. So that's two, factor that give us a very high property setup right there. So we entry there, and we see we entry at what time? We entry at 36, right? 9:36, and we get our 48 right there. Let's see, what is the 48 first? 48 first right here, right there. We get our 48 right there, because it hits the targets by sell liquidity. So let's look at a 4-hour time frame. At around that moment, right? Let's look at a 4-hour time frame. You see, so we seek the buy side liquidity of this candle. So it did go, went up, and it take the buy side liquidity of this candle right there. You see, it take a sell side candle, and then it opened right at the close of this candle. Yep, you look right here. Now you look in there, right there. You see, right at the close of the order block candle, and we target it the sell side candle. You see, it's a huge right move right there. So it's a beautiful trade because you see that the sell side liquidity was taken, and the huge buy side liquidity were trapped, were unbalanced. This is why it go check. You see right here, it's very critical right here. You have to pay attention, okay? It just make a low, a high right here, right? If you make a high right here, then it's not a reliable setup. But if it make a low high, that means it trapped the buy side liquidity for it right there. Then boom, it pull back right there to retest this implied fellow gap or fellow gap right here. You see that the fellow gap right there. You see, it just retests that. That's a beautiful one right there. So right here you can trick this at a bullish because it's swing high, right? This it can be short term or intermediate term high. So it's turned into a bullish breaker right there. So you have auto block right here, right? Fellow gap, or you can treat this as a bullish breaker right there. So we can trick this at also breaker favorable up. So you have a confluence right there. So that's the reason why this trade is so highly, you know, it should rate this trade at A+ setup right there. Yep, this is an A+ setup. We have every signature that the move is guaranteed. Yeah, you have every reason to believe that it's gonna go up. I mean, every key, you know, signature right there. And it read right there beautifully, and retest color time. So that's the first trade we do, right? That's a long setup, and now we have a second trade that we practice. We do a short setup on the block for the gap, and look at the ratio 1:9 risk to goal ratio. This trade is 1:4, so we read 35 cents and we get $1.38. So it's about 1:4 risk to goal ratio right there for us. It's beautiful, right? All right, let's take a look at the second trade. Second trade we have is right here. Man, the second trade is also so wonderful. I mean, so awesome. Look at the detail. We annotate, it have everything. I don't know. I mean, look at that, right? You see the auto block right there, and you see auto block right here, right after I make a giant move up, and you see how liquidity were built up. And you can see the algo behind the scene, the algo that run liquidity is so efficient. If you look at this long enough, you can know exactly what it's gonna do, and then we'll be done. You know, our job is done. We just crack the code right there. I mean, just take practice, repetition, you know, and then you will see that. When you see it, you will never unsing it, right? That's people say. Okay, look at this, right? So you have this auto block, and then you have up here is auto block, and you see that right here, this move, right? So in order to take this buy side liquidity, this have to go here and grab this sell side liquidity, but it did not get it, right? It just, you know, move right here. There's no way for it to get it, so it trapped all the sell side liquidity right here, right? And then right here, if you believe that the buy side liquidity, if you go short here, then you see that the safest target for you is this auto block. Then you have to get out, because at that moment someone gonna go in and buy it. Because if there's no one buy it, then it's gonna go down and take a shot. But someone going here and keep it up because they want to build, you know, because they want to trap this buy side liquidity. That's what they try to do. And boom, they go one more time to take all the buy side liquidity that they build right there. and as soon as they take the buy side liquidity right here, buy side rated, then boom, it go down and it take over all the buy sell side liquidity from this one. You see that? Yeah. So, and we see that this move right here, this candle at 11:05 right there. So we look at 1 minute time frame. This move will not break the bearish order block, right? It will not, because the sell side liquidity all trap here. That means a huge pressure here. It's not going to break there. It just go there and rate the buy side liquidity in order to go down and wrap it. That's it. So if you see the pattern, you put your short right here, beautiful right there, and you reach about 20 cents. I believe we reach 20 cents. We put the note right here, we reach about 20 cents, but we got $1.75 right there. Yeah, see that? So you have all element right there. So our target is going to retest this order block, but actually if we let it will run deeper than this. When we go back to the chart, you will see that. You see how they move, how the liquidity move. We see after they take this buy side liquidity, boom, they go down, right? Can you go here and go long here? Yeah, can you go along here? You can. You know why? Because you see the buy side liquidity will trap right here. That means the imbalance of the liquidity right here on the buy side, so it has to go up. That's why you have a reason to go along right here. So you see this order block, and then as soon as you see this candle, and you can go in at this candle, and you put your stop loss right there, and your target just simply, you know, at this bearish order block there. So you have a good short run right there, right here. You can get out, and let's see how it you know how it set up the liquidity, right? You see, and then it make this move. This move will be not break the order block, because you know why? Because this move did not take the sell-side liquidity. There's no imbalance right there. Yes, it had to take this buy-side liquidity in order to start to go down, but it didn't. You see, it trapped a lot of buy-side liquidity right there and trapped sell-side liquidity both. And the last, at the right time, 11:05, boom, take buy-side liquidity, boom, go down, just sell-side liquidity right there. So we short right here, we have a buy side liquidity rated, right, just rated, we have sell side liquidity trap right there, between targets order block right there. That the sales can trade we see. Now go back to the chart, you see right here, we still have this annotation right there, right here, and we go short. And actually the target is run deeper. So if we are conservative, we can get out here with $1.75. But if we let it run, how much more we gonna profit? Look at that. Oh my goodness, look at here. Right, you're going from here. Sorry, I picked the wrong tool. It should be the trend line, not the price level. You see how much you got? $4.47. And here's the one you reach, right? You only reach about 20 cents. $4.47. So we can update our, you know, our target right there. If we let it run, then it's about $4.47. Can you read that? You reach only 20 cents. Oh my goodness. It's like 1 to, I don't know, a glass. Okay, so 7 right here is 1 to 9, maybe 1 to 20 ratio right there. Right? Let's do a quick calculation right here. Wait a minute, calculation right here. So basically you have $4.45 divided by 20 cents. Yeah, 1 to 20, 22. Wow. So the rich reward gonna be what? $1 to 20. Oh man. Beautiful. Who would thought of that? Yep. And right here, there's some interesting liquidity run that we need to put into our database right here. So you see right here why it stopped right there. The question why it stopped here. You see it. This is a move, right? Okay. So the minute it take this buy sell liquidity, boom, it's going to take sell liquidity. You see right there, and this is the. If you look at the daily time frame, you can see the order block. No, I mean the fair value gap low right there, and thus it become the resistance level. Let me show you right there. What's our D1, which stand for 1 hour. I mean daily time frame, right? Oh, we don't have it. So let's start from here. So right here, this is the gap that we are identify. Let me go back to the 1 minute. Okay, right here. Follow up. Okay, right here. So basically, you see the follow gap right here, high and low. That's what we're going to put right here, low. Yep, right there. So as soon that it close below that, or it go and retest that level, it come down, right, and it go back to retest level, then you can short them right there. And our intermediate target, conservative safe target, is just the buy sell right here. So every time it pop up, it take the buy sell liquidity, then it go down and take the sell liquidity. That's the bearish, signature right there, that I'll move right there. And I want to show something real quick. Right here is the 4-hour time frame early in the day, right? You can see that right here. Also, it's green candle. You see, it start off, about first, I would say first 2 hour, right? First 2 hour, or maybe 1 hour and a half. It go up all the way here, and look at the final. At the end of the day, you want to see at the end of the day. At the end of the day, this candle is turned to be a down close candle. You cannot believe it. And you see that? It's a big green candle, and then it turned into down close candle, and the next candle is not a down candle. Now look at the moment where the FOMC minutes were released. You can see how the price reacts. So from here we can have a good play book for tomorrow. Tomorrow we can apply the strategy so-called second day player, so we can see whether it can continue the trend down or going to be reversal or retracement. So we can play either, either scenario, right? Let's look right here when the new release at 14 with 2 p.m. it went down, and then it go back there to retest, right? And then boom, go down, and I take the sell side liquidity right here, the intermediate term sell side liquidity, and then boom, it go take buy side liquidity. This is the setup that it trapped what? It trapped the sell side liquidity. You see, it traps sell side liquidity here also. You look at that. It traps sell side liquidity right here. No, I mean it clear and then go ahead, trap the sell side liquidity right here. Trap right here also. Go up and then boom, go out, check it and retest. Retest that bearish, break area and boom, going down. See that? After I take the buy, it always go retest that level and then boom, going down. The same, pattern right here. Take that liquidity and then go back, retest, take the sell side liquidity. That's how the liquidity run right there. So let's see. Okay, let's look on the yesterday on the end of day review, right? We come out with, we entertain two scenarios, right? For bearish, we say that it will go up here, retest a little bit, and then boom, going down. We just anticipate going down right there, but actually it goes deeper, and the pullback not even here level. So we learned that when it go back here, this will become a so-called resistance. So it's not gonna break through that. It just retests right below that. So I think we can't, see what it's running. The ballpark is right now, just a little bit detail. We see now perfect. It says so, and here's the signal for bullish right there, but it's no longer valid right now. So I don't know. It could mean tomorrow, if Thursday gonna be the reversal day, right? Because it take a bunch of sell side liquidity out here, and then maybe there's imbalance. That means a lot of buy side liquidity will trap here, imbalance here, and it's gonna go and take it. But there have to be a big order from big money, something to in order to push it up to go get grab the buy side liquidity. Okay, let's look at the DR model for today, right? You have the DR model right here, the implied DR high, implied DR low right here, and you have the mid range, and turn out it's perfect, right? If you you wait for confirmation, it's downtrend right here, right? And to go to retest, you can go right here, and you take a quick trade right here, 0.15 standard deviation, right? If you don't get out, you get stop out right there. It will stop you out, right? However, you make right here, you can put your entry right here, and you can get the 0.15 standard deviation, the low hanging fruit target right there. However, if you go right here, it's a perfect setup for you. So basically, it's a bearish breaker right here, and it retests that bearish breaker. And here you have a giant move right here for you. And the entry is 12.30. Okay, let's see how much from this you gain from this move. Yeah, so you get, well, you get about 1.5 standard deviation down move right there. So if you enter right here, that's the best entry for you right there. You get 1.5 standard deviation, which is very good according to the DR model. The DR model only aim for 0.15. But if you get more than 0.15, then that's a huge move for the DR model. Yeah, that's the DR model right there. That's it for now, but I want you to show you at the daily time frame so you can see that where it head into for the tomorrow. Before we close, we wrap up this one here. You see, so basically it refused, retest the auto block this feather gap and think it go all the way down here, but it haven't take this buy sell side liquidity here. I believe it's gonna go to retest this so-called auto block right here, or even it may go down and take the buy sell liquidity right here. But you can trick this at a bearish breaker. I mean bullish breaker if you believe right there. So this can act like the bullish breaker for it. So it can maybe rebound from here, right? Because you have a bullish breaker here, fellow gap, go up and then retest. So it may, this is a retest in order to go up right there, right? So it may go down a little bit right there, right? And then boom, it's gonna go up. Where it had to, it may take the, it may go up here. If we pull it, it go up here. Mid level, right? And then pull back, and then boom. That's the scenario for Thursday. If it's bullish, right? But if it bearish, it will go down and break this level. What's the level of this one is Owen 496. What the close of this? What about Owen? Should be 436.33. So we're gonna watch for this level. You see how it behavior on around this level for tomorrow. Okay, I think that's it for now, and talk to you later. Thank you. Have a good night and good luck.